Good afternoon, traders. This is Matthew Bresnahan with Blue Line Futures, coming to you from the Chicago Board of Trade with this week's grain market recap. And before we jump into today's price action, we're going to review some of the key figures and big surprises that we saw in today's USDA report. So diving into the domestic numbers, the biggest surprise definitely came with the increase in corn yields, bumping all the way up to 177.3 bushels per acre, which is a record compared to expectations of just 174.7. Now, as a result, this increased corn production estimates to 15.342 billion bushels, which was right at the top end of the range of estimates before the report. And as a result, we did see corn ending stocks domestically notch higher. Now, turning the page over to soybeans, those also saw an increase in yield estimates, but on a much more modest, a modest gap, I would say, by only jumping up 0.7 of a bushel per acre to 50.6 compared to the average estimate of 49.8. As a result, we did see a modest increase in soybean production to 4.165 billion bushels compared to the average estimate of 4.122 billion bushels. Likewise, we did see estimates or ending stocks estimates also tick higher. And the only component of the grain complex domestically that was lower on in terms of ending stocks was actually wheat. And in many ways, wheat actually had some of the most positive news to write home about in the course of the day. Now, turning the page over into some of the global numbers, it is important to note that, the global figures or the global ending stocks all came in above expectations. Now, it is a result mostly of, yields being notched higher, but, a lot of it is also ending stocks. So global corn ending stocks were reported at 325.22 million metric tons. And before the report, the expectation, particularly around corn and soybeans, was what was going to happen with the Brazilian estimates. And Brazilian corn production was cut by 2 million tons to 127 million metric tons, and their corn exports were lowered to 54 million metric tons from 55. Now, on soybeans, the USDA was a little bit more aggressive in their corrections lower to Brazilian production. We did see them cut 4 million tons off of their estimates, cutting Brazilian production down to 157 million metric tons compared to 161 here. And now if you look at exports, that's what's interesting here because the USDA opted to leave Brazilian exports unchanged. And if you look at soybean ending stocks, they were reported at 114.6 million metric tons globally compared to expectations of just 111.58 million metric tons. Lastly, looking at wheat here, world production was a touch higher and ending stocks concurrently were also, a little bit higher. But again, the wheat outlook does look the most constructive for grain bulls, like exiting here today. And there were no major, sweeping surprises as it came by way of wheat today. Now, jumping into the price action, unsurprisingly, with some of the price action that we saw, we did see beans make a new low. But, looking at the one-day chart, you could see the initial panic and reaction after the report kind of quelled, around 12 o'clock here. And we did rally back a little bit. That isn't insignificant because it does show that, bulls were willing to come back to the market. For the day, we did settle down at 10 3/4 cents to ultimately settle at 4.47 even. And it will be interesting to see how prices play out into next week for corn. Soybeans, which also had, their own rough day, did trade, markedly lower here. And at one point traded all the way down to 12.03 even, which was the low for the day. And looking back on it, it tested our significant retracement level between the midsummer low and highs here. But, I do think that this personally is pretty constructive in that, the market was able to find support intraday after a relatively or very bearish USDA report. Lastly, looking over at wheat, this has kind of chopped around in this zone. It does look like we may have, broken trend line support here a little bit. But, let me get this matched up. So we actually did settle, pretty much right on the nose of trend line support there. And, the wheat markets do have a good amount going for them here. And as you can see, just as with corn and soybeans, we did see, prices eventually kind of come back here towards the end of the session. Now, next week, if we do see continued weakness, it's going to likely come by way of the early morning trade, but it will be interesting to see how the markets react and synthesize some of this data in the coming days and weeks. I would expect Brazilian weather and production estimates continuing to be a major market mover for both corn and soybeans over the next 6 to 8 weeks while they wrap up harvest. And we will have to see what the market holds for us next week. Thank you for watching. Give us a like and subscribe.